What's up guys, it's Jonny. ETFs and index funds are really popular. Is this camera straight? Yes, okay. What's up guys, it's Jonny. ETFs and index funds are really easy and great ways for people to get started investing. They don't require a lot of expertise, they also don't require a lot of time, and they also provide an adequate level of risk spreading. But I've received the question a few times with regards to how they work in Europe, because it's not exactly the same as how it works in the US. So if you're an American or another nationality and you're moving to Europe, or perhaps you've been learning about index funds and ETFs, but you've been learning from American sources and you want to see how this translates to Europe, well, stick around in this video because I'll talk about some of the similarities, some of the differences, and what are the things you need to keep in mind when investing in ETFs and index funds while you're living in Europe. So let's get right into the video. Now, a quick disclaimer as we get started. This is for information purposes only. It's not investing advice, and you should, of course, do your own research before you're making any investment decisions. A lot of the examples that I'm going to walk you through today are for ETFs, but broadly speaking, the logic can also be applied to index funds as well. Now that's out of the way, let's get started. So let's start with the similarities. What things are similar in Europe when comparing it to the US when it comes to investing in index funds and ETFs? Well, the first is the functionality as to how index funds and ETFs work in terms of their structure, in terms of the return that you can expect on your investment. So if you're in Europe and you buy an S&P 500 ETF, for example, compare that to buying an ETF of the same index in the US. It's going to do the same thing in terms of return, broadly speaking. We'll come to a detail a bit later in the video. But the way it would work is that it would reproduce the performance of that index, and you would expect your return based on the performance of that index. In Europe as well, you can set up recurring contributions to investing accounts, to ETFs, to index funds on a regular basis, essentially putting your investing on autopilot as well. So you can just set and forget, essentially. Once your money is set up and it's going into those index funds and ETFs, you don't really need to worry too much more about it. You just let the money do the work. When it comes to the ETFs available with European brokers as well, if you take like the most popular ones from the US, like the S&P 500, the NASDAQ, the World Stock Index, for example, there is a European equivalent for each of these, and you can invest in them from Europe as well. In addition to that, you can also invest in European index funds, such as funds that track, the FTSE 100 in the UK, for example, the Euronext in Europe, or specific indexes in Europe as well. And indices like developing markets, Asia, Japan are also available as well. And sector-specific and industry-specific ETFs and index funds as well. You can also access them. Now that's all for the similarities, and though it doesn't sound like there are many similarities, if you think about what these similarities account for, it accounts for a large chunk of how ETFs and index funds work in Europe. So the differences that we're going to talk through now are some very, very specific points that you really need to keep in mind. So let's start by the ETF and index fund issuers in Europe. If you think about the five main issuers in the US when it comes to ETFs and index funds, you got Vanguard, you got iShares from BlackRock, you've got Fidelity, Charles Schwab, and Invesco. Now in Europe, we have some of these as well. We have Vanguard, we have iShares, we have Invesco as well. But I haven't really seen funds from Charles Schwab or Fidelity in Europe, for example. We do have some other prominent players as well. We have the likes of Amundi, Luxor from France. We have HSBC, Legal & General from the UK. We've also got X-Trackers from DWS, quite popular as well. And then you've got, some banks, some investment funds like maybe BNP Paribas. So if you're investing with some of these US players, particularly Charles Schwab and Fidelity, which aren't really present in Europe, then don't panic. We just know that there are other ETF and index fund issuers out there, and I'm sure that you can find something that's suitable for your investing strategy with one of them as well. Next thing to keep in mind is where the fund is domiciled. Now your broker, for example, it might be your bank or your investing platform, it might be domiciled in the country where you're living, but a lot of the ETFs will be domiciled. You'll see it in the ISIN number in Ireland. And the reason for that is because general withholding tax on dividends in the US to other countries is 30%. But the US and Ireland have a tax treaty, and that means that if a fund or an ETF is in Ireland, then the withholding tax applicable is only 15%. So that'll affect you if you have, an accumulating or a distributing ETF where dividends are applicable, because it means that less tax will be withheld and more can be reinvested into your back into your portfolio, essentially. That said, when it does come to tax, how you're taxed on your gains, whether it's dividends or capital gains, that will really come down to whatever country you're living in. So whatever the capital gains tax rate is, or whatever the dividend tax rate is in the country where you're living, or I should say where your fiscal residence is, that is essentially what you'll be taxed on. It's important to note as well that accounts like a Roth IRA IRA, 401k are very much specific to the US. We don't really have those things over here. Now, some countries, yes, they do have tax efficient products, like the UK has an ISA, which I've talked about in some videos on my channel as well. But, tax advantage products or kind of the US, retirement savings investing account setup, it's quite different over here in Europe. And it can vary by country as well. So wherever you're living, make sure that you're aware with what the different accounts are that are available to you where you live in. Next thing to keep in mind is expense ratios. Now, expense ratios in Europe are a bit higher than you'll find in the US. So to give you an example, I'm going to take the Vanguard S&P 500 ETF. So in the US, the ticker for this is VOO. In the UK, a similar ETF would be the Vanguard S&P 500 UCITS ETF. So now in theory, this is pretty much the same ETF. It should have the same assets inside of it. It works in pretty much the same way. We should expect the same return on investment from it, but there's a difference when it comes to the expense ratio. So VOO has an expense ratio of 0.03%, whereas VUAG has an expense ratio of 0.07%. Now, it's not massive, and 0.07% for Europe is still pretty good. It's very low, but it's something to keep in mind. It's not going to massively impact your returns, but the expense ratios are a bit higher. And then if we look at another couple of ETFs as well, just so you get an idea. So we have the Euro Stocks ETF, which has an expense ratio of 0.1%. And we have the FTSE 100 ETF from iShares, which has 0.07% expense ratio as well. And you'll see in like sector industry specific ETFs as well, the more specialized, the higher the expense ratio as well. And when it comes to hedged ETFs, which we'll talk about just now, you'll also see a higher expense ratio as well. Now, hedged ETFs are relevant when it comes to the next important consideration that we have to take in when we're in Europe, which is currency conversion and FX impact. Now, for a lot of investors in the US, this will be a relative non-factor, because if you're investing mainly in like the S&P 500, the NASDAQ, even the world index, the first two are completely dollarized. So you have dollars, you're investing in dollar assets, and all the assets within the fund are listed in dollars as well. When it comes to the world as well, the US accounts for 50-60% of the entire fund. So your foreign exchange exposure is very, very low. In Europe, there are a lot of other currencies that are used. For example, the UK uses the British pound. Countries in the Eurozone use the euro. Countries like Switzerland use the franc. And investors in this country typically will want to invest in their own currency. And now what that means is they can invest in ETFs and funds listed in their currency, but the underlying currency of the assets within the fund might still be in another currency. Like if you're investing in the S&P 500, you're in Europe, the ETF, for example, is quoted on one of the Euro exchanges, you invest in euros and you get your returns in euros. But the underlying currency of the assets in the fund is US dollars. And so what that introduces is a currency exchange fluctuation exposure. And so basically what that means is not only is the index's performance taken into account in this example, but also any movements between the euro and the US dollar will also impact your returns. And so what some investors might do is invest in a currency hedged ETF, which essentially eliminates that foreign exchange risk and produces the exact return because the currency risk is offset by some hedging that's done in the fund as well. Now, to give you an idea of what this looks like in practice, we're going to take a look at a graph which shows the performance of a hedged ETF and a non-hedged ETF. So both ETFs that we're going to look at are of the iShares core S&P 500 ETF. So if we look at the return over the past year of these graphs, I think this is particularly interesting given that there were some significant movements between the dollar and the euro. So by looking at the hedged ETF, this in theory replicates the exact performance of the S&P 500, which you can see dipped and went down in 2022 and has slowly gone back up. However, you can see in the non-hedged one that in the period where the S&P 500 went down, at the same time, the dollar was getting stronger gradually against the euro, and that currency fluctuation essentially offset those losses. And as you can see as well, as the dollars continued to get stronger, then the gains over time have been amplified. Now today, the US dollar and the euro are pretty similar, so there's not a great deal of difference. But this is to illustrate how you can see the differences there. And so if you're invested in markets where there are high currency fluctuations, like maybe in some developing markets, then maybe a hedged ETF can help offset some of that currency risk when investing. Another thing you can of course do is convert your money to whatever currency you're investing in and just invest directly. Now it doesn't eliminate the currency exposure still when it comes to your returns, but if you kind of keep your home currency and the investing currency separate, then in that respect, then it does kind of eliminate some of the exchange risk. So now that we've looked at the similarities and the differences, where can you invest in ETFs and index funds in Europe? So you can use investing platforms such as Interactive Brokers, DeGiro, Trading 212. I've done a video where I talk in more detail about how these platforms work in themselves and the different functionalities available. I'll leave the link in the video description for you guys as well. And if you have a local bank, then they most likely have an investing service as well, where you'll be able to invest in ETFs and index funds, most likely through that platform as well. So really not too complicated to get in from a broker side of things. It's just knowing which one is suitable for you. So guys, I hope you found this video helpful and useful. Leave a comment and let me know, are you investing in ETFs or index funds in Europe, and which platforms are you using to invest in? Until next time, I'll see you on the next one, and let's get this money.